Hello, everybody. We're live now. I'm happy to have Gabriel here from OpenLeverage join us at Huobi Wallet for our DeFi 101 workshop. If you don't know what is leverage, is pretty new to the DEX industry. Gabriel is going to go through everything. Um, before we go further, I just wanted to let you know that you can download Huobi Wallet mobile app from the App Store or Play Store. Create a BNB address because Open Leverage is with us on the BNB blockchain, and there will be a very exciting post workshop activity for you to join, in which you will stand to win a share of 10,000 OLE tokens, which is the native token of Open Leverage. And also, this is very important. This is a sharing session and not any financial advice. So please do your own research before you put your money in anything. All right. So Gabriel, good to have you here. Perhaps you could share with us a quick introduction about Open Leverage and run us through the different ways that people can participate in your platform.
Yeah, thank you so much for the introduction and thank you for having us in the live stream today. We're super excited to partner up with Huobi Wallet. And yeah, we can get started. So Open Leverage is a permissionless margin trading protocol. We are currently deployed on three chains: Ethereum, BNB chain, and KuCoin community chain. So one of the benefits of Open Leverage is this word permissionless. And what that means is that anyone can add any token pair that exists on a DEX in order to trade margin on that pair. So that means that there is no gatekeeping as opposed to centralized exchanges where tokens need to be added by a group of decision makers. Here, what we really can do is just plug and play. A user can add any single pairing that exists on DEXs. So with that, we can get started. As you can see here from the market overview page, we've gotten pretty good traction over the past 24 hours, about 13 million in trading volume. This is on BNB chain with about 10 million in TVL, generating some fees for our users and for the protocol, and building up some insurance value. And I can get into that later. So there's many things you can do in Open Leverage. The first one is adding pairs. So, for example, but I'm actually going to start with the lend to earn feature because I think this is the most simple and intuitive feature to the protocol. So if I go to this tab called lend to earn, I can get a breakdown of pretty much all the tokens that are being currently offered on the platform, and I can see, for example, on the left-hand side of the column, this is the asset that I can lend, and these are basically the tokens that are being borrowed against this asset. So some of the more popular pairs like BNB, for example, have more token pairs, and some of the less popular tokens might have less options. But for example, say I want to lend BUSD and generate some yield through my lending. I can see here that there is up to 11.22%, and this is sort of your base yield. And on top of that, we do have a reward ratio where we're allocating all the tokens to these lending pools. So if I click on BUSD, I can see that I can supply, say, BUSD, and traders would essentially be borrowing to trade BTC. So this means that we'd be borrowing this BUSD to trade BTC. So if I go click on this pair, for example, I can get some more details about this particular lending pool. I'll see, for example, that the total value locked in this pool is 670K. 104K has been borrowed for a 15% utilization. So what this means is that traders are borrowing BUSD to go long Bitcoin, and hence they're paying some yield to these depositors. Now, the way that interest works is that interest is not fixed. Interest is variable. That means according to the overall demand in the pool, if there's more traders who are wanting to go long Bitcoin and they're borrowing more BUSD, this interest rate is expected to go up as more traders borrow. Conversely, if there's less demand to say go long Bitcoin and less traders are incentivized to borrow, this interest rate will go down. So we are not paying a fixed yield. The yield varies based on how much is being utilized. But I think a cool thing to mention here that I'll gladly say is that we view this source of yield as being sustainable. That means this 15% yield that you're getting, it's not based on incentives. It's not based on OLA tokens. This is actually sustainable pure yield. And an important thing about OpenLeverage is that it essentially allows most tokens to become yield bearing. That means if there is sufficient interest to short or long those tokens, they offer a unique way of generating yield for that asset. So if I wanted to lend my BUSD in this particular pool, for example, I can approve the BUSD and the deposit. And there's really no minimums to depositing. And when I do that, I will receive an L token, which is essentially a proof of receipt of having lent my my tokens. And there could potentially be functionality to those L tokens. They could potentially be used to stake elsewhere. For the time being, that is kind of a limited use case, but we expect there to be more use cases as maybe other protocols can build functionality on top of those L token receipts. Covering now the lending, we can jump back here, and I can just give another example. For example, if I wanted to say lend BNB, I have quite a bit more options in terms of pools, and I will say that if I wanted to lend my BNB, say for traders to borrow and trade Floki, my overall risk as a depositor is limited to this pool. So it doesn't matter how many people are borrowing to trade Matic or borrowing to trade BUSD or so. My sort of exposure is only limited to this token pair. So it's isolated to this token pair, as in BNB Floki. With that, we can jump into the real meat of OpenLeverage, which is more on the margin trading side. So as you can see from this menu on margin trade, we have all these different pairs where you can essentially go long short. The token that you're going long short is what sometimes we refer to as asset A, which is the first asset listed in each pair. So with that, we can maybe choose an example here. We can go for BNB BUSD, which is one of the most popular pairs. So here we can see a total breakdown of how much volume has been traded on this particular pair, both total and then last 24 hours. We can see how many positions are active, active longs and active shorts. So we can see 150K active is long, 62K active short. A nice, cool breakdown of the price history, and you can even switch. You can switch the base pair. Bear with me 1 second. I think this is mostly my internet being slow, and you can also see a basic or a trading view of the performance for BNB BUSD.
Okay. Okay, but firstly, back to the basics. What is long and what is short?
Awesome. Yeah. That's definitely a good place to start. So when we refer to as going long, that means that as a trader, I am taking a view that the price is going to go up. And that's the directional bias that I've taken as a trader. So if I'm going to go long, I'm assuming the token price is going to go up. If I'm going to go short, I'm assuming that the price is going to go down. And leverage essentially multiplies or amplifies the profits that you can make when you're trading. So if I'm using, say, 2 times leverage and the price of BNB goes up, imagine it went up by, say, $10. If I'm using 2 times leverage, my real profit is going to be $20.
Okay.
Conversely, if I'm going 2 times long, that factor or amplification is going to work also for when I take a view that the price is going to go down. So if the price of BNB goes down by, say, $10 and I have 2 times leverage, I'm going to be losing $20.
But how can I lose more than I have?
Well, that is no, that meant like the price move of the token. But in order for you to enter a margin trade, you need to essentially put down what we refer to as collateral.
Okay.
And
What is
collateral is the amount that you essentially commit to initiate this trade. So collateral is the overall amount of capital that you are willing to risk on any particular trade. And what you're doing with open leverage to achieve your trade is, say I wanted to go long BNB, and maybe I wanted to commit a certain amount of collateral. Maybe I wanted to go long BNB with, say, 100 BUSD. So if I wanted to go long 2x, you can see here from this line called the trade amount, my total trade amount is going to be 200. That's because I've chosen a leverage of 2 times.
okay?
As you can see here, if the price of BNB drops to below 238, I stand to be liquidated. And this is done in a very streamlined way where the protocol, aided by liquidators, they'll do it sort of automatically. So as a trader, you need to be actively monitoring your position. There is a feature where you can be notified when your position is in risk of being liquidated. But the liquidation price is a very important thing to watch, because if, say, I wanted to go long BNB by depositing BUSD at 2 times leverage, if the price of BNB drops beneath 238, that's where I stand to be liquidated and incur losses on my collateral. Now,
Okay.
say if I wanted to, say, raise the leverage to 5 times, what this is going to be doing effectively is now my overall trade amount is going to be 500. But as you can see, my liquidation price is now a lot higher. That means there is less of a margin for BNB to move before I stand to lose a material part of my collateral. Essentially, I'm taking on way more risk for more potential gains, but also I need to be way more conscious of the price of BNB moving against me. We refer to it as moving against you when the price goes down, so I don't become liquidated.
I
But if I
see.
were to decrease my leverage here, for example, back to 2 times, now again I have a little bit more of flexibility in the overall price before I stand to be liquidated. And the way that,
Okay.
sorry, go ahead, Lindy.
Yeah. I was just wondering if let's say I have a leverage. Let's say if now I'm at maximum leverage, right? And then the
Right.
price moves against me such that I am about to get liquidated. Can I quickly adjust the margin? Can I quickly adjust the leverage down in order to avoid that while I'm still in? I haven't closed my position yet.
Yeah, you can't. That's a great question. You can't adjust your leverage down. In that case, you have 2 options. You could essentially close your position before you get liquidated, or you could post more collateral to protect yourself from being liquidated.
I see. But can I change the leverage if let's say I don't want to do either one of that?
Unfortunately, you can't modify the leverage factor once you've initiated a trade. You would have to close and reopen a new trade.
I see. Okay, I understand.
Right.
And
Right.
let's say I have a long position and I want to hedge it, can I open a short position as well on the same pair?
Yeah, you could actually. Yes, you definitely could.
I see. I don't have to
And
close it. I can have running long and short together.
correct. You can run long and short together independently. Correct.
I see. Cool.
Yes. And that's where, as a trader, if you're going to be putting on complex strategies, it definitely pays to think about things more creatively, and sometimes it can actually be more efficient to do that, to have two positions in parallel. Um, but it really varies, a case by case basis, and also as a trader, another thing that you should always be looking at is, in order to achieve this leverage, say here, I'm putting down 100 of collateral, but in order to get a trade size amount of 200, I essentially need to borrow 200 200 BUSD. Sorry, another 100 BUSD in order to buy $200 worth of BNB. So I'm essentially borrowing 100 BUSD. And what I need to be looking at is how much interest I'm paying here, and this is quoted as yearly, how much interest I'm paying in order to put on this position. So imagine in some world where I put on this trade and the price of the price of BNB is exactly the same price as it is today. The price didn't move. In some crazy non-volatile scenario, the price is the same. In reality, I would actually end up losing money because I was paying some small interest. It wouldn't be terrible, but I'm paying interest to the depositors. So also something to always be looking out for. Sometimes when there's a lot of demand to long and short a particular asset, this interest rate might actually go up. So another thing that you should always be sort of looking out for.
So what is this interest rate? Is it a source of revenue for open leverage?
This is actually paid directly to the lenders. So when we spoke initially about lending your tokens on OpenLeverage, this is
Yep.
where you stand to make interest based on traders using these funds and paying interest.
I see. So the more traders who are on margin, the more that we stand to earn in our lending pools.
Correct.
I see.
Absolutely correct. Yeah,
I see. Okay. So great. So we should refer our friends to trade more.
exactly. Exactly. We tell users to trade responsibly, but yeah, definitely be active in markets and and have fun with it too. So that's something I talk to the co-founders all the time. Like, I sometimes I lend some tokens, and that's where I make yield, and then I'll pull a little bit of play money just to have fun and trade my friends and discuss how we're doing. And it's just we view it as it should be done responsibly, but also why not have fun with it?
I see. Yeah. Okay. So you mentioned that there is a minimum amount to enter. What is this minimum amount, and is it the same for regardless of pair?
Um, it is pretty standard. For lending, there really is no minimum amount. For trading, usually you'll have to open up a position with at least $100 worth.
Okay.
So
Regardless of whatever pair. I mean, some pairs are more risky, and some pairs are stable coins.
yeah, usually like for most pairs, you have to post at least $100 worth of collateral. Anything less than that, we think that uh, fees can sort of factor in. So I think 100 and beyond is a good amount to sort of enter.
Okay. Sure. Sure.
Yeah,
Yeah. Please go on.
yeah. Um, so yeah, this is for, say you wanted to long BNB, but I think the other topic we didn't cover is now, if you wanted to short BNB, for example. So if I want to short BNB, I can maybe put on the same exact trade. I can post $100 of BUSD to short. Now my trade amount is also going to be a net notional amount of 200 BUSD. But here, what's happening is the opposite. If I wanted to put on a 2x leverage trade to short BNB, remember I'm betting on the price to go down. And here, what's happening really is that I'm borrowing BNB and I'm selling it to BUSD. So I'm borrowing BNB at 424. I'm selling it at 424, and I'm hoping for the price to go down. because as the price starts to go down, when I want to close my position, I can essentially rebuy BNB, but now at a cheaper price and pay back the lender, and I get to pocket that difference. So that difference is basically my P&L as a trader. So the thing to remember is, say I want to long BNB, I want the price to go up. I'm essentially borrowing BUSD to buy BNB. If I'm shorting BNB and I want the price to go down, I'm essentially borrowing BNB to sell it for BUSD. So things kind of get flipped, but it's the same mechanic. It's the same exact mechanic, and the interest rates will be different. So if I wanted to short BNB, the interest rate to borrow BNB is 32%, so it's a bit higher. And markets have a way of sort of communicating sometimes some information, and this isn't always precise, and it's not a rule, and it's not a definition by any way. But if the interest to borrow BNB is high, it means that essentially means that people are sort of, well, I take that back. It really varies by pool. I'd rather not get caught up in saying something that's wrong, but it just sort of speaks about the demand there is to go long and short, and you can sort of tell certain patterns from what's going on with the interest rates, because this is market driven by how many people are longing on short or shorting.
I see.
Yeah. Any other questions on the trading?
Yeah, okay. So this kind of strategies is very common in centralized trading. So I just want to know, like, what is the difference? Is there a big difference between decentralized and centralized trading on leverage?
Um, I think for the average retail user, what can really change is sort of the experience that we offer. Centralized exchanges are great, and I think historically they've sort of catered to more whales and larger players. And you get some benefits of trading on a centralized exchange. You definitely get some benefits. Uh, but what we wanted to build with decentralized leverage trading was to build a fully permissionless platform. So if you're going to trade on a centralized exchange, and I'm not going to name any, but you sort of need to wait for them to add certain tokens, and there's not a lot of community involvement in how some of these tokens get added. Um, they might experience downtimes. They might experience some delays when you're funding your account. There's a whole sort of built-in process that they have, and that process is not always transparent and not always open. And here we really wanted to create something that was like truly open and community-driven. So something we didn't discuss, for example, is if I'm trying to put on a trade and I'm looking for a token that might not be listed, as a trader, what I can do, or as a user, is I can create this pair here. So if I know the token address for the token that I want to leverage trade, I can just add the contract right here. I can go on CoinGecko or CoinMarketCap, look for the contract, add it, and see if I can create a pair. And I can choose the other token that's going to be paired against it. And sort of more seasoned users will sort of see that the best token to choose for token B is to make sure to find a pair, maybe on, say, PancakeSwap or BuySwap, to find a pair with deep liquidity. And when you find a pair of deep liquidity, it'll be more efficient to margin trade that token. So anything is really fair game, and this is a really cool thing about OpenLeverage, is that you can add pretty much any token as long as there is sufficient spot liquidity on a DEX. And it's totally community dominated, which we find to be very cool, and we see that the possibilities really are endless. And we view OpenLeverage as another tool. It's another tool for DeFi users to generate yield. It's another tool for DeFi users to put on leverage. It facilitates price discovery for some of these assets, and it really is just a neutral tool built atop of existing DEXs.
Yeah, I really like it. I think what I like the most is the transparency, because I know in many central trading houses, whether it's crypto or forex or whatever else, they have this bookmaking, and they kind of play around with your slippage. So yeah, I think I prefer it if it's a DEX, and nobody can tamper with it. Okay, so
Exactly.
yeah, thank you very much, Gabriel, for your live demo. It was really insightful and fascinating. We'll move on to some Twitter questions.
Okay.
First one, what gives the value of OLE token? What is the role of it in your ecosystem? I know you have not TGE yet, you have not generated a token yet, but already we have keen interest. Could you please mention some advantages of holding OLE in the long term?
Yeah, no, that's a great question. So yeah, as you mentioned, the OLE token is not out yet. We can't really specify an exact date, but we are building in a lot of different levels of utility to this token, and we think that if you are an active member of OpenLeverage, there's going to be strong incentives to hold it. And I can sort of mention some of those benefits. Uh, we are going to essentially give OLE token holders who lock their tokens a lot of governance power over how we run the platform. Um, we might also encourage things such as discounts when you're trading with OpenLeverage. So instead of paying the usual rate, you might get certain discounts. We might also introduce some tiers to lending. Say if you hold a certain amount of OLE tokens that are locked on the platform, you might be able to boost the yield that you get on lending. And finally, something that I didn't get a chance to touch on that I think is very important is that OpenLeverage is our vision for the protocol is to be a social finance platform. That means we want users to not only say have OLE tokens and stake them and just sort of be passive, but we want users to be active. We want people to invite their friends, trade with different communities, and that's why we've built a pretty comprehensive rewards platform. Um, as you can see, when you sign up for OpenLeverage, you will be entered into this referral program where you will get a referral link and a referral code. This is pretty much the same thing. You can share with your friends who sign up for OpenLeverage, and then you'll be eligible to claim rewards based on your friend's activity, both on lending and trading. And then we have these different epochs in the Invitation League where we will allocate prizes to the top three referrals for each individual token pair. Now, in the future, we view currently the way this works is that for the Invitation League, we have a score that's assigned to users both for how much of your referrals, how much they lent, and how much they traded. But in the future, we're also going to weigh how much OLE tokens you have staked on the platform. We might have that as a way of incentivizing these overall scores. In order to claim rewards, you're going to have a certain amount of OLE tokens staked to get a high score and be eligible to make some of these rewards.
I see. Oh, that's very interesting. Okay, so now we move on to our next question. Open leverage allows you to deposit any token to generate passive yield, but how does this really work, and how can I determine which is the best token to generate profits?
Yeah, that's a great question. And I think we briefly touched upon this. When you lend your tokens to OpenLeverage, or you're lending it inside of the protocol, say you wanted to lend BUSD, you are essentially lending your BUSD because traders on the platform are going to borrow that BUSD in this case, to trade another asset like BTC or BNB or Cake. So when those traders enter into a long or short position, they are essentially borrowing those tokens to facilitate that oversized position. So they're paying a yearly interest rate to you. Now you can deposit any amount of tokens into the platform, and there is no lockup dates. So you can lend for as short as a couple minutes to a couple days, weeks, months, and you're generating interest. And I will say that in this sort of ramping up phase, we are incentivizing users to both borrow and trade. by allocating a certain amount of OLE tokens, which are going to be eligible for a claiming period once our IDO happens.
I see, I see. So the quick answer to this question, I guess, what is the best token to generate profits, would be the token that we think is the most in demand that people would want to borrow for margin trading.
That's definitely a right strategy. You can sort of look at the overall yields and determine based on both the interest rate and also currently a big factor is the rewards you're going to get to make a decision on what you wanna lend. Say some of these tokens have much higher reward ratios and yields than others. Something to keep in mind though is when you lend your tokens as a user or as a lender, you're still exposed to the price of your token. So be mindful of the fact that you still have some risk, more so on the price of the token. So you don't always maybe want to lend the token with the highest interest rate because you also need to factor in how that token's price will perform over the
Yeah,
long term.
that's right. Maybe I lose more money if the token goes down than I even earn in the interest.
Exactly, exactly.
Yeah, okay. So, last Twitter question before we go to the live questions. Open Leverage has an insurance fund that will be used to compensate lenders if the loan fails to maintain the solvency of the pool. How much percentage can be compensated?
Um, that's a great question. So yeah, based on the fees that OpenLeverage generates, some fees will obviously go to, say, the referral program, and then a certain fixed amount of fees will also go to fund insurance funds for each individual pair. Uh, and what that is essentially doing is, if we experienced a period of dramatic market volatility where prices moved around quite suddenly, and if for some reason the liquidations sort of got out of whack, and liquidations weren't processed in a smooth manner, and there were losses in the platform, we will use that insurance fund to sort of cover those losses for lenders. It really is a case by case basis, and things can get kind of complex. But I mean, the way it is set up right now is that the platform is fully solvent, and we expect that as we sort of build and keep building this insurance fund, we will be even more confident that the platform will continue to be solvent and be able to sort of handle any of those unforeseen liquidity events.
That's great. That's great. Okay, now to the live questions. The first one: what plans do you have to grow rapidly in terms of users, global market, and partners? What are your strategies in building a big and strong community?
Yeah, that's a great question. I think that right now we've sort of been using two main avenues for growth. The first one is community driven. We're incentivizing users through rewards, very, I would say, strong rewards campaign to incentivize users to lend as much as possible, to trade as much as possible responsibly. Uh, by We're currently about 47% of all fees generated from the protocol are being used to reward the most active users on OpenLeverage. So almost close to half of protocol fees are currently being used to incentivize users. And we're also making these users eligible for our airdrop in order for them to sort of own the platform. So we want users to be active, but we also want users to be the owners of this platform where they can dictate the direction that we take in the future, and they can participate in governance and participate in all these decisions that we're going to have to make down the road. Um, and the second strategy that we've been pursuing is a broad sort of business development strategy where we're partnering with a lot of the right partners. We've partnered with the largest exchanges on Ethereum, on Binance, and also on KuCoin. And it definitely has been a great process for us because we sort of, it is like a flywheel. We sort of add volume for these dexes, and then they help us out by bringing in more users who want to leverage trade, and we create a very nice sort of partnership flywheel. So that's been the second large avenue for growth.
Okay. Now this user has a question. Since NFT is popular nowadays, is there a plan for NFT integration?
Um, that's a great question. The way that NFTs work is that they are a different token kind from your say uh, ERC20 or BP20, which are pretty much like the standard tokens that we have in crypto that are fungible. For NFTs, it would pose some challenges. We are thinking about curious ways to sort of incorporate them. We are in talks actually right now with a partner. I probably won't get into the details just yet, but if that does happen, we'll have a prompt announcement. But we are thinking about there are other protocols that sort of are creating ERC20 or BP20 tokens that sort of track the price of some of these larger NFT collections. So, for example, there are tokens that track the price of punks or bored apes, and those tokens are definitely fair game. Like you could definitely leverage those if we have enough liquidity, and it's something that we would like to provide. So yeah, definitely, we're thinking about ways of integrating NFTs.
I see. Yeah, because I also saw that you did some previous AMAs with some other platforms, and you're giving out some NFTs. So definitely there'll be people asking about what's the use of these NFTs.
Well, that's a great point. This is more on the trading side. On sort of the loyalty side or the utility side for these NFTs, we are providing NFTs, and right now we don't have any planned announcements, but I would definitely say hold on to them because we definitely might have something in the works as well for that.
Cool, cool. Okay. Next question. I'm a potential user, and I'll go straight to my question. Now, I'm an early user now, definitely. Open Leverage has just started late last year, right? So, what are the advantages that early users can have, and is there any special privilege?
Um, yeah, I mean, we think that using the platform right now is sort of getting in on the ground level in terms of the OLE tokens that you're going to be able to claim once the token is launched. So those rewards are going to be sort of scaled down as we keep growing and as we get closer to our token launch. So it definitely pays in crypto overall to be early, and with OpenLeverage, I think it's very clear. Those incentives to use the platform to lend, to trade, to refer your friends are very high right now. They will likely be tapered as we get closer to launch and as we pass the point of launching. So to answer the question, definitely, I would say take advantage of the promotions we have going on right now because those might not last a long time.
Yeah, definitely. Well, now as you know that early users always have advantages, so especially now that before Ole has launched, definitely we want to get into it as soon as possible, because once the token launches and all the buyers start coming in, then the price is going to shoot up already. That's what happens for most coins. So I guess that brings us to the end of our presentation for today. And just to repeat, we have 10,000 OLE to be given out in a post workshop activity. Please stay tuned to our socials to find out more. You can get more news in Twitter and our Telegram groups. So, again, this is a sharing session and not any financial advice. Please do your own research. So, thank you very much, Gabriel, for sharing with us. So, for our audience, let me just conclude for you the ways that you are able to join in open leverage. So there's margin trade and there's lending. For margin trade, there's a minimum amount if you want to join, and the minimum amount is approximately 100 BUSD. Whereas for the lending pools, there's no minimum amount. So for smaller players or for new players who just want to try your hand at something small before you start to go big, you can try your hand in the lending pools. And then when you're more confident, you can move forward to the margin trade. Good news for you is that for our post workshop activity, there's no minimum amount to join. So after the end of this workshop with Gabriel, you can just start to join. So thank you very much, Gabriel, for your time. And thank you to all the audiences for participating.
Thank you so much, Lindy. Thank you for organizing. This is great.
Thank you. Bye, Gabriel.
Take care. Bye.